Ladies and gentlemen, good day and welcome to the Escorts Limited Q2FY20 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Saksham Kushal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thanks, Neerav. Good evening, all, and on behalf of PhillipCapital, I welcome you all for Escorts Limited Q2FY20 earnings conference call. I also take this opportunity to welcome the management team from Escorts. Today we have with us Mr. Shailendra Agrawal, Executive Director, Mr. Bharat Madan, Group Chief Financial Officer and Corporate Head, Mr. Shenu Agrawal, CEO Agri Machinery, Mr. Ajay Mandhar, CEO Construction Equipment, Mr. Dipankar Ghosh, CEO Railway Equipment Division, and the Investor Relation team. We would start the call with a brief opening remarks from the management, followed by Q&A. Before we start, I would like to add that some of the statements in today's discussion will be forward-looking in nature. Over to you, sir. Mr. Madan, sir, over to you.
Thank you all for joining us on the earnings call for second quarter ended 30th September 2019. A snapshot of company's standalone quarterly performance is as follows. Turnover at rupees 1,323.9 crore against rupees 1,398.4 crore last year is down by 5.3%. This is primarily due to drop in tractor and construction equipment volumes. Tractor volumes went down by 6.1% to 19,750 tractors as against 21,039 tractors last year. Construction volume went down by 29% to 945 machines as against 1,331 machines last year. EBITDA at rupees 126.7 crore against rupees 157.5 crore last year is down by 19.5%. EBITDA margin now stands at 9.6% against 11.3% last year, impacted by product mix, lower operating leverage and higher manpower costs. Finance cost is down by rupees 2 crores to 3.9 crores as compared to quarter ended June 19. The total debt outstanding as of September 19 is rupees 79 crore, down from 277 crores in March 19. Net debt, however, continues to remain negative at rupees 391 crores. There is an exceptional item of approximately rupees 9.2 crores on account of an old product liability claim in USA market that we settled during the quarter. PBT stands at rupees 108.7 crores as against rupees 154.4 crore last year same quarter. The company's standalone PAT now stands at rupees 104.6 crores versus rupees 102.7 crores last year due to company opting for lower tax rates from this financial year that resulted in tax rate gain over the first quarter and restatement of deferred tax liabilities at revised rate amounting to rupees 23 crores approximately accruing in this quarter. As a result, PAT margin now stands at 7.9% versus 7.3% last year. EPS stands at rupees 8.75 as against rupees 8.6 last year same quarter. Now moving on to segmental business performance. On agri machine business, domestic tractor industry volumes went down by 10% to 1.68 lakh tractors as compared to 1.85 lakh tractors in previous fiscal same quarter. Our domestic volume went down by 8.6% at 80,789 tractors as against 20,553 tractors in previous fiscal same quarter. Industry in our strong markets in North and Central India degrew by 1.8%, whereas industry degrew by 18.2% in the opportunity markets of Southern and Western India. Our domestic market share stands at 11.2% for the quarter ended September 2019, marginally up over previous fiscal same quarter. Our exports have done well, which grew by 97.7% from 486 to 961 tractors, basically on account of very strong response to Adam series around the world. On channel front, we have added net 45 new dealers in India during the quarter, taking total number of dealers to 950 plus. Going forward, we will continue to expand our dealer network in both strong and opportunity markets. The current channel inventory at the end of October 2019 stands at comfortable level of less than 4 weeks. This quarter, on account of lower sales and production volume, and unfavorable product mix, EBIT margin now stands at 10.3%. Industry in second half is likely to fare better than first half due to festival season and plentiful rains in most parts of the country, leading to improved farm sentiments on the ground. But lower quantum of construction activity and low subsidy allocation by central and state governments continue to affect the industry. Coming to the construction equipment business, our served industry, backhoe loaders, pick and carry cranes and compactors degrew by 30.1% in Q2 FY20. Our total volume, including manufactured and traded products in the quarter ended September 2019, correspondingly was down by 29% to 945 units as against 1,331 units in previous fiscal same quarter, leading to marginal improvement in market share. Despite volume drop, EBIT margin improved due to reduced commodity prices, better product mix, and price increases to 2.7% for the quarter ended September 2019 as against 0.7% in previous fiscal same quarter. Construction equipment industry continues to see some slowdown on account of financing issues and delayed payment for ongoing infra projects. However, in the mid to long term, we expect that our served construction equipment industry will grow in high single digit. Coming to the railway division, revenues at rupees 126.7 crores went up by 19.6% as against rupees 105.9 crores in previous fiscal same quarter. During the quarter, we have executed 42% of the total orders coming from new product category, which have more import content and lower margin as compared to the previous fiscal when it was only 30%. EBIT margin for the segment now stands at 19.1%. Order book for this division as of September 19 stood at around 500 crores that will get executed in next 12 to 15 months. For FY20, we expect railway equipment segment to grow by 15 to 20% and margins for the segment are likely to be maintained. Now I request the moderator to open the floor for Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder, you may press star and 1 to ask a question. The first question is from the line of Raghunandan from Emkay Global. Please go ahead.
Good evening, sir. Thank you for the opportunity. Sir, my first question was, how was the performance for tractor industry in the festive season? Which regions, states have supported performance? Do you see the recovery sustainable, and what is your outlook for FY 2021? Hello? Hello?
Yeah, just a second, Raghu.
Yeah, sure.
Yeah, this is Shenu. Am I audible now?
Yeah, Shenu, I think. Yes, sir. So there is a question from Raghu from MK Global on the festive season, how it has gone and which regions have done well, and what is the market outlook for next year 2021?
Yeah, Raghu, sorry for this disruption, but festive season, we saw some good signs of recovery in the last month, starting with Navratra in September. And April, August industry, as you know, was moving at about 15% down. And September, October industry has still degrown, but has degrown only to the extent of -5. Right? So there is a significant recovery from -15 to -5 compared April, August to last 2 months, September, October. And as we continued in the season, actually things got better. So we had some good signs in Navratras, and then as we approached Dhanteras and Diwali, I think the momentum was made it better. Now this momentum we think is going to continue because we had a delayed sowing this year, which resulted in delayed harvest. So the cash flow cycle is also delayed for rural India, and therefore November at least until the next 2 to 3 weeks should see a good momentum on the retail side. In terms of regions, North India, I mean there were some specific regions which did better than others, but I think except 1 or 2 states in the country, every part of the country saw some revival. Right, so I think it is slightly inclined more towards North and Central and Maharashtra. I'm talking about the recovery. But I think in future, South should also see some good recovery because of the kind of rainfall we have received.
Raghu, hope your question is answered.
Yes, sir. Just one clarification. For the festive season, festive this year versus festive last year, was it a positive growth or a marginal decline?
Yeah, so that is remain to be seen because September, October, November, because Dhanteras and Diwali was in November last year, and therefore we have to complete this November to see how did the overall season fare. But my expectation is that we will still see a strong recovery, although the overall numbers would be smaller than last year's season, which I mean by September, October, November combined.
And the outlook, sir, what you would see for FY 2021?
It's a little bit too early to comment on it, but I think let us go through November. But I'm definitely sure that what we had seen in April, August, which was -15 down, I think the entire year would be much better than that, maybe negative single-digit kind.
Understood, sir. Thank you so much. I'll come back in the queue for more questions.
Thank you very much. Anyone who wishes to ask a question, you may press star and 1. Next question is from the line of Hitesh Goel from Kotak Securities. Please go ahead.
So, yeah, thanks for taking my question. Sir, basically, just wanted to get a sense on the outlook for third quarter and fourth quarter specifically. You are saying that it will be still a decline on second half because if I see the base is quite low. So can you just attribute the reasons why this should be a decline? Because Rabi crop should be very good, right? I mean, just wanted to get a sense on this November to March kind of outlook.
Hitesh, I think the response what Shenu gave was not that the H2 is going to be low. He said the overall for the full year, the degrowth is likely to be down to single digit, which is about 5% level compared to the first half where the degrowth is 10% plus. So actually H2 will be better than H1, but it will probably still be, even if it's at best flat, still it will be to 5% degrowth on a full year basis.
Okay. And sir, last year you had said that subsidy sales were only in single digit as for the industry per se. So so why has that been an important factor this year for tractor demand to come down? I can understand, the first half was weak because of delayed monsoon, but in second half, is NBFCs also a big factor that NBFCs are not aggressively taking calls on the tractor side and maybe a few customers at the margin are getting rejected, which is also a factor. And if NBFC situation improves, you could see much better growth. Can you just tell us something about that on the NBFC funding side? What is happening?
Yeah, see, funding side, we had a little bit of a situation with NBFCs. I don't think it was directly related to tractor industry performance as far as their portfolios were concerned, but I think it was more of an overall scare that the NBFCs were in. But thankfully, starting this season, there was a real recovery from the NBFC side also, so they went very aggressively to push the market. Right. So, at least in the season, we did not see any problems as far as financing was concerned.
Okay. And just my last question, if you see a strong Rabi crop, basically, which is likely, and government has increased MSP also, then what would be your outlook for FY21? At least first half should be a decent growth because you've seen a very bad base in the first half. Would that be a fair assumption to make for FY21?
Yeah, see, right now we are considering two scenarios. In both the scenarios, we think that the things to come will be far, far better than what we have seen in the last 8-9 months. Now the point we are considering is whether the momentum will really increase from March or whether it will take up to May or June. Right? So that is still a kind of question that remains unanswered. But definitely next year would be far better than what we have seen in last few months.
Okay. Thank you, sir, and all the best.
Thank you very much. Next question is from the line of Rikin Govani from Infina Finance. Please go ahead.
Thanks for taking my question. Sir, I first wanted to just understand that in your market share performance, I particularly noticed that in markets like UP, there has been some, market share corrections that have happened. If you could elaborate, any specific trends there and, anything that you would like to attribute that to?
Yeah, see, as we have been talking about our focus, so our focus has largely been in our opportunity markets for last 1 year or so. And we have, in the last 2 or 3 years, we have put in significant initiatives in these markets. So if you look at our market share, we have really grown in opportunity and weak markets, which is the Eastern Bloc and Western Bloc and also in some states of the Southern Bloc. Right, so that is the focus area. In the strong markets right now, we are trying to maintain our market share, which is already at about 14 to 15% range. And in the opportunity markets where we are between, let us say, 3 to 8% range, that is where we are hoping for most of the growth.
Okay, understood. Okay. And secondly, on the...
Sorry to cut you off, Rikin. Can you please speak a bit louder?
Sure. Is it better?
Yeah.
Yeah. Also, if you could highlight what is the sort of growth that you're looking at in the exports volume for next year? With the Kubota relationship now entering the second year, how do you think things should pan out?
For next year?
And a related thing, if you could update on, how the JV with Kubota is panning out and or if you can share any update on that as well.
Yeah, so on the exports front, I think this year will be a tremendous year for us in exports in terms of growth from the previous year levels. So I think the growth should be in the range of 35 to 40%, something like that. And we are, even so far in H1 we had that kind of growth already experienced. So this year would be a good year for exports, and of course we want to build on that going into future, because that like in the ranking we are still one of the bottom players as far as exports out of India is concerned. Right, but we have been talking about a lot of investments we have made on products for exports for Europe and other markets, and therefore those investments I think will bring some results next year also. Now it is we have not completed our budgeting process, but please do consider a significant growth next year also in exports volume. As far as the Kubota JV is concerned, the status is pretty much same as last year because it has a kind of a gestation period. So we are in the process of building the factory right now, and I think things are going more or less on schedule. And we will have the target was to start production around mid of next year or mid of next calendar year. So that should happen on schedule.
Understood. And lastly, in terms of the pricing environment, if you could highlight, is it would you characterize that being steady in the tractor market or any specific discounting trends that are existent?
No, there were some players who indulged in some amount of discounting in Q1, but after that we are back to kind of a steady state. Right. So right now, I don't think there is any extra push on pricing that is being made by any one of the players. We are going through a slight kind of a deflationary environment, but the prices are quite stable.
Understood. Okay. Thank you.
Thank you very much. Anyone who wishes to ask a question, you may press star and 1. Next question is from the line of Jinesh Gandhi from Motilal Oswal. Please go ahead.
Hi, sir. My question pertains first on tractors. In this quarter, we have seen almost 3% QOQ drop in tractor realization. So is that just reflection of mix, or there is anything more to that?
Using quarter on quarter?
quarter-on-quarter, yeah, vis-a-vis first quarter.
Yeah. So essentially, basically, it's on account of mix, so there's no major change. And there's another reason is obviously this time there's a slight drop in the non-tractor sale actually. So I think which was 10 to 11% range in the last quarter has come down to about 9% in this quarter. So that also has a play because you are looking at a consolidated picture of both tractor and non-tractor revenue in that number. So otherwise on per realization basis on tractor per se, there is no major change. But on non-tractor sale, definitely there is some decline, which is reflected here in the realization.
Okay. Understood. Secondly, the rail PBIT decline is again reflection of this higher import content in the new orders or again anything beyond that?
In railway?
Right.
Yeah, in railway is essentially like you said, because this time the mix of new product is almost 42% in the overall orders which are executed compared to 30% which was last year. So that new order book is growing, though in terms of absolute number, obviously we are doing much higher revenue now. But yes, in terms of margin is slightly lower compared to the normal conventional product which we had. So that again is a temporary impact. I think which will be there for about a year or so. But after that, we expect we should be able to improve on the margin. But even on a full year basis, we are likely to sustain the margin at the last year level.
Okay. And what would be contribution of this new products in 1Q FY20?
In FY20?
Right.
Yeah, in overall, in terms of revenue contribution,
1Q
in terms of revenue contribution, there will be almost 40 to 45% range.
No, sorry. My question was for 1Q FY20, what was contribution? First quarter.
First quarter was 34%.
Okay. Understood. Great. Thanks. I'll come back in queue.
Thank you very much. Next question is from the line of Mitul Shah from Reliance Securities Limited. Please go ahead.
Good evening, sir. Thank you for taking my question. Sir, my first question is on the product mix in the tractor segment, which impacted our ASP as well as the profitability to some extent. So can you give exact detail in terms of power drive versus farm drive ratio and whether this similar product mix continued in the month of October and what would be the situation going forward?
See, between power track and farm track, if you look at this quarter, it's almost 41% sale coming from farm track and 59% coming from power track. And really, if you compare it with the last year, same quarter, it was 38% for farm track and 62% for power track. Though in October, the share of farm track has slightly moved up, so the mix has been slightly better in October compared to what we have seen in the last 6 months.
So full year basis FY19, if you can give similar number for power track, farm track.
So roughly 40-60 ratio on a full year basis.
So going forward, this would not change much.
Not much change, really.
So second question, sir, you highlighted that whether recovery would happen from March or it may be from the June, July. So in both the cases, there is then possibility that next year number would grow from the FY20 level. So in this situation, in past we have observed that cyclical downturn lasts for 2 years at least. Industry decline for 2 years, then it start growing. But in this situation, then it will remain negative only for 1 year during down cycle. So do you expect recovery much ahead of the normal cyclical downturn this time because of various economic factors or including monsoon you highlighted?
Yes, Mitul. See, actually the slowdown started from last year only, like November, maybe October, November onwards. And in some of the competitors also reported that last year until Diwali was not as per the expectation, right? So actually on ground, the slowdown was there since October onwards last year. So if the recovery or if the growth starts happening from, let us say, June, then firstly it will be about 18 months of slowdown. The second thing is, like you said, right, that monsoons have really helped this quick turnaround, because right now the water reservoir levels is great. Most of the parts of the country have received excess rainfall, and I have been personally traveling quite a lot because of the season. and I have personally talked to customers, and the sentiment is really, really good. And they are really expecting a bumper crop, and they are very positive about the future, at least next 2 years or so.
So positive monsoon of this year would have positive impact for next 1.5 year kind of situation, right?
I think at least 3 crop cycles.
All right. Thank you, sir. Last question on the construction equipment side. Our break-even point is down significantly, and right now it's reported positive a bit. So what would be the new break-even according to this new structure of the cost as well as ASP and product mix?
So this year we expect it will be somewhere around 280 to 300 machines a month average.
And sir, what is your view on this in terms of next 2-3 years point of view on the volume as well as on the margin side? Once the industry right now it is declining, once it start recovering, what would be your margin target for that?
So like we said, our long-term margin target on this has been high single digits. We've been targeting to reach a level of 8 to 9% margin on this. So though this year, right now we are at less than 3%, and we expect probably on a full year basis it will be somewhere around 4% sort of margin. But yes, the idea is to target to 8 to 9% sort of margin in next 2 to 3 years time frame.
So you see Q3, Q4 margins much better.
And that's the normal trend. I think if you look at last 2 years also, normally second half is better for the construction equipment industry. But obviously this time it a lot depends on how the financing issue really pans out and how the NBFC respond to the situation. But that's been one of the bit of challenge right now for the construction equipment industry. And second also in terms of the funds which are stuck with the government for various infra projects. If the money gets released, then we'll see pretty good revival. So demand is there in the market, but the issue is the liquidity really.
Okay, sir. Thank you. Thank you for answering question.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. Next question is from the line of Ravi Yolekar from CGS-CIMB. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, my question was on construction equipment segment. We have seen significant improvement in realization sequentially in the construction equipment for the last 2 to 3 quarters. So I just want to understand what the current product mix and is it sustainable, this realization?
Good evening, this is Ajay with you.
Yeah.
It's a combination of the realization which is coming out of the product mix, the cost initiative that we have taken in-house. And we feel that, going forward, probably the product mix will become even better in terms of realization per product. So, as Bharat has said, this coming 2 quarters, it should be an improvement, definitely. And we are all working towards bringing down our costs, breaking points have come down, and that will be the trend that will follow for some more time. Okay.
And sir, what's the current product mix in terms of cranes, backhoe loaders, and in terms of
70% is cranes, more or less, and then you have the backhoes and compactors going in tandem. So 74% to be precise on the crane side, and out of that, 51% is of high value products, high-end cranes.
Right. And sir, on this Doosan Infracore partnership, so how is going, and what's the current contribution in terms of volume mix on the Doosan?
So it's basically a niche product for us. It's a high value product, where we are competing on the top of the market, in terms of price, and there is element of foreign exchange as well, that plays a role in the game that we play, because most of the manufacturing has been already localized by the competition in India. So we have our niche play, and that too in the mining sector. So because of the monsoons that we had heavy on Rajasthan side, the numbers were less, but now we are seeing that uptrend coming in. We should be able to sell good value there.
So, could you please indicate this volume mix in percentage current?
In the excavator?
Yeah. From Doosan.
In terms of Doosan, as a percentage of revenue you're talking about?
In the volume or percentage or revenue?
5 to 6%.
Sorry?
In revenue. 5 to 6% in revenue.
5 to 6%. Okay. Thank you.
Thank you very much. A request to all the participants, please restrict to 2 questions per participant. The next question is from the line of Amit Goel from Ray Enterprises. Please go ahead.
Yeah, thanks for the opportunity. Just one question. Could you throw some light on the inventory situation now? Like we've always been hearing that the inventory situation is quite difficult. So could you throw some light on that? And we saw that you've generated a fair amount of cash. Could you throw some color on that also?
Yeah, Amitji, I will respond on the inventory and maybe have Bharat respond on cash.
Sure.
October for us especially was really a very, very good month because we had a all-time high monthly record on both our deliveries and releases. And with that momentum that we could generate, our inventory is actually at a very, very optimum level right now. Both the company inventory of finished goods and also the dealer stocks. Actually, I think in terms of dealer stocks, Escorts is placed best in the industry right now in terms of number of days of sales, which means that we did raise the stocks a little bit in September because of the festive season, but we have totally corrected it now in October. So inventory we are fine, and October definitely was a record month for us in the entire history of the company.
Okay, that's great. Yeah, that's very encouraging, Shenu. Thanks. Yeah. And what about the cash situation now? That must be reasonably liquid now, no?
Yeah, so I think if you look at the cash flow also, I think this time the cash from operation has been almost 300 crores positive this time compared to the negative situation last year. So last year we were building up inventory, expecting a very good season going forward too. So this time obviously a lot of correction has happened. So even in the first 6 months, the production compared to last year is down by almost 24%. Even though the sale has been down only about 10%, but there's a sharp cut which has been taken on the production side to cut down on the inventory levels. So that's what is reflected in the margin too, which has actually got impacted in the first 6 months, though, but in terms of cash flow, I think situation is pretty good as of now.
Great. So Bharat, you're expecting some recovery in margins in the second half?
Yeah, so do we expect some margin recovery to happen now? Because going forward now the inventory unit, like you said, at the end of October, we are sitting at only less than 2 weeks of inventory within the company and less than 4 weeks of inventory with the channel. So overall, situation on inventory is pretty good. So going forward, if the market really recovers, or even if it's a flat market, we expect, I think the overall margin improvement will happen in the next 6 months in this second half, basically.
That's great. Yeah. That's very good. Thanks, Bharat, and all the best for the upcoming season.
Thanks, Ramesh.
Thank you very much. Next question is from the line of Mayur Malik from India Nivesh. Please go ahead.
Yeah, sir. Just trying to understand the operating efficiency. So we've seen YOY volumes were down 6%, but we've seen the operational efficiency get hit by more than 200 bips. So despite your gross margins improving significantly, we could not really see that benefit coming into the EBITDA margins. Some light on that?
Yeah, so like I said, when the sales is visible as a decline, which is only 6%, the production decline has been steep, which is 19% in this quarter. So that obviously led to the inventory correction, which is I think reflected in the cash position also, because the overall operating cash has actually improved significantly. So we did correct inventory in this particular quarter also. It's a 90% reduction. So over and above the 6% sale decline which happened, so effectively we did 13% more production decline to really maintain our inventory levels at a reasonable position. So which is what has impacted roughly 2% margin on account of the production cut which got undertaken in this quarter. So which is why we're saying going forward we expect the recovery in margin to happen in second half.
So this should ideally mean that the benefit of lower raw material will continue along with operating efficiencies coming back.
That's right.
Okay. And secondly, just wanted to know how is the trend in the horsepower? So are we selling more of the 40 plus as the trend was in the past, or we've gone back to doing the 30, 40 HP more because of focus more on the agri side?
So I think, like we mentioned, I think the mix has been slightly negative if you compare really with last year. So last year, our less than 40 HP sales was roughly 51% and more than 40 was 49%. So then the trend got slightly adverse this year, with less than 40 HP has gone up to 55% and more than 40 HP has gone down to 45%. So 4% adverse change has happened in the mix front. And obviously the major change has happened in the less than 30 HP segment where the margins are low. So that's another factor which impacted the margin, even though we did a lot of cost initiative to make up that shortfall in the mix. But still, that is one factor which had been impacted compared to last year.
So would this also be because construction activity has been low? So ideally, just want to believe that, assuming that people would pick up higher HP for multi-purpose use, including construction. So could that also be a reason why we've seen sales of the 50 plus not really picking up in the recent past?
Yeah, that's
I think,
yes, please share. Continue.
Okay. No, I think it is a fact that construction activity was very slow in the first half, but it did not really impact the way the HP segments moved, because pretty much 31 to 40 was same in terms of industry weightage, and also 41 to 50 was same, right? So that although that is a fair assumption to make that construction would have impacted this, but it hasn't. I think in our case, lower than 40 HP sale is kind of by design, because we did launch some new models in this category, especially the compact series, which is actually doing quite well. And our market share in 21 to 30 has more than doubled in H1 compared to previous year H1. Right, so we were absent in this market and we were leaving a large chunk of the market in hands of the competition. And that's why we designed a tractor which has been received very, very well. Now, of course, margins are lower in this new range, but we are working towards it to raise the margins as we go along.
All right, great. Thank you so much.
Yeah.
Thank you very much. Next question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Hello.
Yeah, Dhaval, please go ahead.
Yes, sir. So just one question from my side. Sir, what were the subsidy-driven sales at the industry level for the first half? So last year there were some 70 to 90,000 tractors were sold on the subsidy. Yeah.
Yeah, the first half was a little subdued. I don't have the exact numbers first half versus previous year first half right now. But I know it has been quite subdued so far, and the main reason was mainly like elections, because of which a lot of funds got squeezed out for some time temporarily. But second half we are seeing some momentum or expecting some momentum from markets like Assam, Telangana, and a couple of other markets like even Maharashtra and Gujarat. Right, so I think probably we will be maybe 5 to 10% overall in subsidy sales at an industry level, but it should catch up in H2.
Okay. I suppose the subsidy has started in Gujarat from July onwards. So are you seeing some sales number impact of that on our volumes there?
Sorry, can you repeat the question?
In Gujarat, the subsidy was supposed to start from July onwards. I think that's what we discussed in one of the two previous calls. So has the subsidy started? You seeing any volume impact?
Yeah, subsidy has now started in Gujarat on the scheduled date of July 1. So yeah, I mean, so Gujarat will see some buoyancy because of that. But remember, Gujarat is very, very steady on subsidy, and every year pretty much it starts around June or July, right?
Okay, correct. Great. Okay, great, sir. Thank you very much.
Thank you very much. Next question is from the line of Srinivas Seshadri from Mirabilis Investment. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, I have one question regarding this emission norm change from the next year, I think about a year away from now. So broadly, if you can help me understand basically what will change in terms of the engine part, and secondly, your own preparedness in terms of the coming out with the product well in time, and also what kind of economics it would mean for the buyer, and whether it can result in a meaningful pre-buy for the tractor industry per se.
Yeah, first of all, let me clarify that the new emission norms which are going to be applicable from 1st of October next year, which is the current scheduled date, will affect only tractors above 50 horsepower, which is right now only about 7% of the total market.
Okay.
Right. So it may not have a hugely significant impact on the overall industry because the volumes affected will be only 7 to 8%. Secondly, of course, there will be some change in the dynamics as the cost of the tractor or the price will increase in the range of, let us say, 1 lakh or upwards on the current base price of 6.5 to 7 lakhs.
Okay.
Right. So there would be about, let us say, 15% kind of impact on the price of the tractor. So there will be some change of dynamics about 50 horsepower. So some customers may then prefer to buy lower than 50 horsepower tractor on which there will be new emission norms, or they may even go up and buy 60, 65 horsepower tractors just to justify that additional cost. With some extra power they will receive with higher HP. Right. So in terms of our readiness, I think we are completely ready. Although the market will take time to adopt to this new technology. The automotive industry is very familiar with this as they are already into these kind of norms and these kind of new engines, which we call CRDI engines. Right. So generally, customers, at least who own automobiles, they are familiar with this. Right. So it won't be, I think, much of a challenge, but definitely there will be some change in the market dynamics in the higher HP.
Okay. And sir, for the below 50 HP, is there any timeline around this change in the emission norms, sir?
There is no scheduled date yet. It is still under discussion with the government.
Okay. Got it. So just one question on the railway segment. You mentioned that you have a higher share of traded because of the shift in demand to the new tech products. So, is there any plan to localize that, and what kind of time frame are you looking at to again bring it down over that?
Yes, this is Dipankar. Yes, we have a very targeted localization plan for all the import content what we have. But as you would appreciate in this government safety business, where you have a lot of field validation trials and all the stuff before you can actually do a localization. So though we have already localized some of the products, they are, as we speak, going out for the field validation trials. So that's why we are saying it will take a year or so to do the localization, because in railways there are two parts of the localization. One is the physical localization of the product, and the second part is the trials and testing in the field. So that also has to be completed. That's why we are talking about a year's time frame from now.
Okay. Got it. Thank you so much for your replies.
Thank you very much. Next question is from the line of Naveen Kumar from Bandi Investments. Please go ahead.
Hello. Happy Diwali.
Happy Diwali to you, Naveen.
Yeah. Sir, question my is, sir, we have purchased for Prozon from long time. So we want to hold long 2-3 years. So sir, recommendation on Prozon, Tanna and Coffee Day. Or we buy Infosys or Quick Hill.
So you can't get your questions. What is the question for Escorts management?
Sir, yeah, sir, we are holding Coffee Day. What about Coffee Day? We exit or hold it?
I think it's a wrong question addressed to us, so maybe you need to leave on the wrong call.
Yeah.
Probably on the wrong call.
Quick hill लेना चाहिए, quick hill.
I wish we can answer your question.
We move on to the next participant. The next question is from the line of Hitesh Goyal from Kotak Securities Limited. Please go ahead.
Thanks, sir, for taking my question. Sorry, sir, I just missed that point of one gross margin expansion on Q&Q basis. So how much of the commodity cost benefit has come through on a Q&Q basis, and how much is more likely to come through? Because steel prices have come off quite a bit.
Hitesh, I think the major benefit for the steel prices actually is on the construction equipment segment. We are seeing some positive moments. So almost 1% improvement has actually happened because of the commodity prices over last year. Though on the tractor side per se, the benefit has not been much because we don't really buy much of steel there. So it's more like castings and forgings which really are bought, where the impact has not been much. And also on the rubber side, we're seeing some price escalation happening. So while there is some impact has been there favorable in the last 2 quarters on the material cost side. So where we're seeing about 0.3, 0.4% sort of benefit coming in on the commodity prices side. And going forward, we expect the same will get sustained. So we don't expect anything significant to change really in the third quarter on the commodity front.
Okay, sir. Thank you.
Thank you very much. Next question is from the line of Bharat Kinani from Sharekhan. Please go ahead.
Yes, sir. Thank you very much for the opportunity. Sir, I heard your comment on the previous question that for FY21, you are expecting tractor industry to grow. So, have I heard it correctly, and what would be the reasons for the same, if you can highlight?
Yeah, so you heard it correctly. I mean, that is what we are estimating right now. And as I said, the customer sentiment is very positive right now. The monsoons have been much better than expectations, and quite evenly spread also throughout the country. And I mean, based on what we are seeing at the ground, we think that this momentum will continue to increase. I think on the financing side also there are no major threats right now. And we have actually seen some improvement in the last 2-3 months. If you look at the industry scenario also, April, August -50 to September, October -5 is a very positive side. So we do think because of these reasons and some others, we will see some growth in tractor industry next year. It's hard to quantify it right now. I think we should wait another 60 or 90 days to put a number on it.
So, okay, sir. So, it's fair to assume that it will be single to mid-single digit kind of a growth, if at all. I mean, if the November sort of that sentiments continue to sustain.
Maybe on the next call I can confirm that.
Okay, sir. Thanks a lot, and all the best, sir.
Thank you.
Thank you very much. Next question is from the line of Raghunandan from MK Global. Please go ahead.
Thank you, sir, for the opportunity again. What would be the breakup of capex across segments in terms of the segmental asset changes? Railways capital employed seem to have grown faster than other segments.
See, for railway, there are 2 unique reasons. I think other than capex has not been much really on railway side. I think one of the issue in railway is because from this year, for all the tendering process, the government has shifted from earlier they used to accept the bank guarantees as earnest money, and now they shifted it to cash basis. So that has led to some accumulation on the tender money really with the railways, so which really will take some time before it really comes into the cycle. So we have about 25-30 crores which is now stuck in the earnest money deposit this year in the first 6 months. The second issue which railway had was on the GST accumulation. Because if you remember, in the railway parts, the output is taxed at 5%. Used to be taxed at 5%, and your input costs are much higher. and there was no provision of any refund against those input taxes. But recently the government has shifted the tax rate from the railway products also from 5% to 12% based on the representation from the industry lobby. And now going forward, we expect that the accumulation will not be there, but whatever has happened in the last 2.5 years, which is roughly 25 odd crores, so that probably will get utilized over the next 12 to 18 months. So hopefully going forward, we'll have a better capital employed in the railway business coming down compared to what we have seen in the last maybe 6 to 9 months.
Thank you, sir. Sir, another question on the debtor days, that's roughly about 50 days. How do you target reduction ahead?
So obviously, like you said, September, since we are looking at the big retail season which happened in October, so there was a build-up of inventory which happened, which will led to some increase in the receivables. So October situation has been pretty good actually. So we had a record cash inflows in October month. So this is one and highest retail which happened really on the tractor side too. So obviously the debtor days, if you really move to the end of December period, you will have a much better visibility, and the days would have actually come down to a normal level, which used to be about 35 to 40 days range.
Thank you, sir. And for the tax rate, given the deferred tax benefit, full year tax rate should be around 23-24%. Would that be a fair assumption or much lower?
So effective tax now, because earlier our ATR was about 32% plus, which will be now down to 25% plus, which is there. And obviously there is a one-time benefit from the deferred tax liabilities, which is about 14 crores, which is already taken in this quarter. So yes, on full year basis, I think it will be somewhere close to 23-24% this year, but going forward, it will get stabilized at 25% plus.
Thank you, sir. That's all from my side.
Thank you.
Thank you very much. Anyone who wishes to ask question, you may press star and 1. Next question is from the line of Sabyasachi Mukherjee from Centrum Portfolio Managers. Please go ahead.
Yeah, hi. Thanks for the opportunity. A couple of questions. First of all, can you help me understand the retail sales during quarter 2 and as well as the festive season during October?
Yeah, so festive season retail sales, we had a record in October. And even September, October combined, it was much better. Yeah, so I mean, retail scenario is actually better than the billing scenario. I think we don't share retail numbers. Therefore, I will restrict the comment to this right now. But you may want to know
if you can specify the quantum of YOY growth, probably festive to festive.
See, I think the festive season last year extended till November, so it will be long to compare really because we're still in the middle of that season, so we can't really give the number because the November is still running. So far the first 2 months definitely we have seen growth in the retail, but obviously since the November this time is not a festive month, so it will be wrong to give comparison based on just 2 months performance. So we'll rather wait for November to be over and then look at the entire festive season of September to November, which will be a real indicator. So as of now, I think it will be more misleading if people tell you about a growth pattern, but there has been a growth across the industry. But that's because of preponement of the festive season to October. So let's wait for another month, and then for the combined 3 months, we can definitely share the number, how the retail is looking like.
Okay. And secondly, on the subsidy status, last time when we spoke at the Q1 call, you said there's a large subsidy been awaiting in Assam and probably something is expected in Telangana as well. How has that come up, or should we expect something in Q3?
Yeah, so both Assam and Telangana are expected to start in Q3. Telangana, in fact, has already started moving a little bit in the last couple of weeks. And Assam also, we should have a final decision around end of this month. So I hope supplies start from December or January onwards.
And anything on Maharashtra?
Maharashtra, the subsidy is ongoing. There is no big new scheme yet. There are some discussions underway within the government, but nothing specific yet.
Okay. That helps. Thank you. Thanks a lot.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Priya Ranjan from Antique Stock Broking. Please go ahead.
Yeah, thanks for taking my question. One is on what will be the share of non-tractor revenue in the overall tractor, segment, and how it has been moving, and because for last 2-3 years or last 2-3 quarters, when the entire downturn has happened.
So in this quarter, the non-tractor revenue is about 9%, and it was about 10.7, 10.9% in the last year and in the previous quarter. So historically, it has been in the range of 8 to 9%, but we have been trying to focus on this particular segment to improve going forward. So, but this quarter, obviously, there has been some impact on the demand side, but we think in the full year basis, it will get made up and we'll be back to 10 to 11% sort of revenue in this full year.
So entire farm, distress or whatever you want to call it, or entire tractor industry decline for last 1 year, how do you see, this revenue was also, or this equipment business has also suffered significantly in terms of downturn?
Yeah, if the agriculture activity gets impacted, then definitely your other revenues and the spare part implement also gets impacted. So that's obviously there's a direct correlation there over there.
But the tractor is still significantly penetrated compared to the other farm equipment, implement, etc. So there you have more of a penetration gain as well. So ideally this should not have too much of an impact because you might be getting some share as well.
Yeah, so that's the thing. In the long term, definitely we expect this segment will continue to grow, which is also our aspiration if you look at even our Vision 2022 document. So it talks about the growth coming in from the non-tractor segment, which includes your engines, implements, and spare parts. So that is a long-term trend, but in the short term, on quarter-to-quarter basis, if we really try to compare, and 1 or 2% movement here and there can happen.
Okay. And in terms of the construction equipment business, if I look at, this year, this quarter or first half, the crane business has been significantly. So if the backhoe loader, which is more of a road construction and other parts, so that business starts picking up, then how do you see the margin panning out? Because that is one segment where the problem is in terms of profitability.
Yeah, this is Ajay with you. Our focus for this year is to have, we are focusing on EBITDA margins. That is very important for us, and that is what we are not chasing the market share per se, if you ask me. So that will be the objective as we go along for this year and the next year.
Okay, so we are kind of avoiding market share in the backhoe loader, or we want to just keep some contract where we can't make money. Is it what we want to go?
Very on the niche market side, where you have the aggregate handling or mining applications. So that segment is a segment which gives us the right kind of remuneration. So that segment will focus, and the retail segment, where the competition is very stiff and discounting happens, there we would tend to pick and choose.
Okay, that's all from me. Thank you.
Thank you very much. The next question is from the line of Samir Deshpande from Fairdeal Investments. Please go ahead.
Hello, Mr. Madan.
Yes, Samir.
How are you?
Yes, fine. Good.
So it is nice to see recovery in the volumes in the last 2 months, and despite the very high base which we have been growing by at least 2 to 3% over that. And now after hearing this festive season sales, etc., do we expect to have some modest growth in the second half in the tractor volumes over last year?
Yeah, sir, we have yet to see, but definitely we are sure about one thing, that September, March industry will perform much better than April, August.
Because I think you mentioned that the at the end of the year, it is likely that the volumes may drop by about 4 to 5% compared to the last year. So if you derive the figure,
this on a full year basis.
Estimate will be available sometime later, but on full year basis, we are expecting a single-digit negative growth.
Single digit?
Negative growth for the full year. Because April, August was already minus 15. So even if things improve in September, March period, we still think there would be some negative growth for the entire year.
4%. So from that, if you derive the half two volumes, the last year volumes were some 51,000 odd. So it seems that we will be in a position to hold on to those levels.
Let's see. We also hope to do our best and definitely better than the industry.
Okay, thank you. Thank you and all the best.
Thank you.
Thank you very much. As there are no further questions, I will now hand the conference over to Mr. Bharat Madan for closing comments.
Thank you, ladies and gentlemen, for being present on this call. For any feedback and query, feel free to write into us at investorrelation@escorts.co.in. We'll meet again in next quarter. Thank you very much and good evening.
Thank you very much. On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.